growing traction on tax reform. According to a new poll from Politico and Morning Consult, nearly half of voters who have heard of the White House proposed tax code overhaul support it. Only 37% were against the plan, while 15% had no opinion. For more on how investors are reacting to the tax reform proposal, we want to bring in the author of Think Bigger and Tiger 21 Chairman Michael Sonnenfeldt. Michael, good to see you.
Thank you.
Thanks so much for joining us. So your group has over 500 members, collectively managing over $52 billion in assets. A lot of AUM there. You've got to allocate money. Tiger 21 provides its clients with insight on investing. What's the insight right now after this $4 trillion gain in value?
So first of all, we're not a manager. Our members manage their own money. They're mostly entrepreneurs from across North America. But by and large, 20% in the public markets, 21, 22 in private equity, and 33 in real estate. Add those risk assets up, it's about 73, 74%, which is a high number, although a low allocation to public equity.
Do they think that, do the clients believe tax reform will impact their money? How will their lives be impacted?
Yeah, I think that part of the money in risk assets reflects that we're in a low interest rate environment. But these are not clients of ours. There's members of our organization. They're all successful entrepreneurs, some of the top across North America. And what they think is that the environment is good enough to have that kind of high allocation. Our members are pretty much universally in agreement. Lower corporate taxes, anything below the current high rate will make us more competitive. So whether it goes down to 20 or 15, we've seen numbers both ways. Dramatic improvement because the United States is not competitive at 35%. And if that repatriates the trillions of dollars, that would be good too. On the income tax side, a little less clarity. Some are deficit hawks, don't want anything to grow our deficit, and others think less taxes the better. So real clarity on corporate taxes and a wider range of opinion on personal income taxes.
Don Peebles, it feels like, already the anticipation of a tax plan has this market up and people feeling confidence about economic growth.
Yes, look, the allocation you just laid out is similar to my own personal allocation. I'm a real estate developer, and so we develop around the country. What we are very excited about is the concept of the pass-through entities being taxed at the new corporate rate.
Sure.
So when a developer develops condos and pays that income tax rate at the ordinary level of 39%, there's no consideration for the job generation and the risk elements that go into that trade. So we think that's going to be a big shot in the arm for development around the country, and we'll see more residential development because I think companies like mine were looking less favorably, and that's why we've had this big growth in residential rental buildings. How are your members responding to this creation of a different tax class for the pass-through entities?
So obviously, just for the reasons you've said, our largest allocation among our members, 33%, is in real estate, so directly reflecting of what you're saying, and private equity, and there's lots of forms of that are going to do it. But anything that simplifies the tax code, repatriates the dollars from overseas, lowers the corporate rate or the effective rate that makes us more competitive is going to be great. And I think, there's still a lot up in the air about scoring and whether there's going to be what the rates are based on the scoring. But the general trend is a very positive one.
What about the fear of, what about the fear of an increase in the individual rate? You think that's going to have an impact on the investors?
If they have a fourth bracket, you're saying?
Yeah.
Yeah.
Because he's talking about going beyond 35%,
right.
And to potentially, again, higher than 39%.
Yeah. I think that people compare this to the Reagan era when the marginal rates were much higher, and you had the Laffer curve that said if you bring down the rates, you actually increase tax revenues. At these lower rates, I'm not sure that there's as much universal agreement about what moving it up or down is. So we think that our entrepreneurs are going to be full of energy to do great things at any of these rates. As I say, some of our members are real tax hawks, but I think it's the corporate tax and the effective corporate tax on commercial activity that'll make the difference.